investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the Pennywise Financial Podcast, and welcome to the show.
All right. Welcome to the Pennywise Financial Podcast. This episode is now the back-to-school edition, right? Dave
Yes,
Georgiev here, Constantine.
Good afternoon.
Mid-year market report. I guess a little check-in on the pulse of the stock market and how people are kind of feeling. What are customers or clients telling you?
Surprisingly happy, because remember back in March, April, the world was falling apart because of tariffs.
I sure do.
Market was down. S&P was down 16. QQQ NASDAQ was down 21. Today we sit at a positive 10% S&P.
We do.
I think the NASDAQ's up like 12-ish.
I think that, yeah, you're probably
Slightly,
right.
11 and a half, 12. Quite the shift. Dude, think about that. That's a 30% swing for the NASDAQ. And that's a 25%, 26% swing for the S&P. All within 4 months, 5 months?
Yeah, it's like a violent whiplash roller coaster.
Yeah.
What
is your favorite roller coaster? Can we get off tangent? All time, quickly.
All-time favorite roller coaster, I would have to go with Guardians of the Galaxy.
It was good. We just got back from Disney this summer. That was good.
Yeah, I mean, I don't know though. Like
Let's
go back. It's a coaster, but it's not.
Yeah, no, that's way more than
like
just a coaster.
Traditional, legit.
Let's go to Darien Lake. Like
Darien Lake. Yeah, I mean, I think that's
Viper.
No, that's.
Predator?
I mean, that is classic.
No, if you had to
Superman.
Oh, I forgot about the Superman.
What?
Yeah, my bad. I'm like old school before Superman was around.
How did you forget the Superman?
I know. That is actually amazing.
It's a great ride.
Anyway, speaking of rides, it's been a wild ride. April, everybody jumps off the boat because tariffs are coming. Now they're trying to ban the tariffs, right? The Supreme Court. And now people are jumping off the boat because they're banning the tariffs. Like you see the market volatility because of the potential banning, and now the government's not going to make the money that they were planning on. It's like, what a swing. Think about that.
That's like a double-edged sword. Because think about it. If they do invalidate and they say that the tariffs were not legal, you couldn't do it, whatever it might be. So when we unravel that, shouldn't that make the people who were so worried about tariffs happy again and make things cost of goods and services and things like that a little bit cheaper? I don't know.
But that's the crazy part is they were crying when tariffs were coming, and now the tariffs might be going away. They're crying. Like I'm talking in terms of market volatility. Like the market's losing money for both. Like it's like talking out of both ends of your mouth, right?
Don't cry for me, Argentina. It's like you're crying to get what you want, and then when they give it to you, you cry that you don't want it. Right?
Got a bunch of babies. Yeah,
a lot of crying in here.
It's nuts. I'm surprised. I don't know if I'm surprised. I'm kind of surprised at how good industrials have done this year.
Yeah.
It's kind of out of nowhere.
I mean, you think about industrials in the past decade or so. I mean, we really haven't done much, right?
No.
You know?
Same with value. And value's come up nicely this year. How about international? Boom.
Out of nowhere.
Yeah, it's only took 16 years. Every single year. So Constantine, myself, I'm sure a lot of people in the financial industry, we get bombarded with people coming in. They're called wholesalers. They come in, they say, hey, my mutual fund or ETF or investment is the best around. Let me tell you about it. And for the last 16 years, every year they come in and they're like, this year, international is going to pop. It's undervalued. It's underweighted. It's cheap. Buy international. I remember going to Seattle right before COVID with you for a presentation of this, and they had like 35. I won't mention the firm, but the firm had 35% of their money internationally, and this was 2019. And they were like, this year, international is going to pop. And international, 16 years later, finally popped this year for the first time since like 2011, I'm going to say.
And those were some bright people. I mean, they had credentials like you couldn't believe. Smartest minds in the room.
Mm-hmm.
I mean, a lot smarter than I am.
Yeah.
And just got it wrong.
Well, yeah. Well, it goes to show you that cheap doesn't always mean value, right? Just because it's cheaper doesn't make it better. And we talk about that a lot with investments in general. Like, oh, this has a low cost. Everybody loves Vanguard. We love Vanguard. But that doesn't always make it best in class just because of the expense ratio. Now, oftentimes it does. I mean, let's call it what it is, but not every time. And I still remember a client that we had years ago, I had personally, that ended up saying, Dave, I love you, I love the firm, but I'm going to manage my own money at Vanguard where I can save the advisory fee. And he went there, and they ended up, based on his risk tolerance, they ended up putting him in a more conservative portfolio. So where you're saving roughly like 0.75% in total advisor fees based on his balance, and he had a good amount with us. 0.75 maybe he was saving in total fees between us and Vanguard. And the problem though is he went from 85% equities to 60% equities. So literally his rate of return was dramatically different. And it's like, just because it's cheaper doesn't make it better. Now you can argue, oh, maybe he was too aggressive here, but it was within his risk tolerance when we filled out the questionnaire. So whatever happened in the conversation there changed dramatically. And he ended up, now it's like, I'm saving 0.75, but now it's like my portfolio, and I'm making up the numbers, but it was like my portfolio returned 9% this year and your portfolio returned 6%, net of fees and expenses.
Yeah, I mean, that's another good point too, is when you look at an asset allocation model, if you're at a big firm, if you're at a big bank, if you're at a place that's publicly traded and they dictate the investment decisions that you're making, they're always going to say, you have to have an asset allocation model, which means you have to have between 20 to 30% in fixed income. And that may not be the right thing. I mean, it might match up with age and what it should be, but those asset classes might not be performing. So why do you have to own them? And that was a big question I used to get at other firms where they dictated how you invest their money. We don't have that here. We're a firm where we can go in and choose something that's appropriate for each client, right, based on their needs and their wants. Not just, hey, you're 75, so you should have 75% of your money in bonds.
Yeah.
Because that's not right.
Well, that goes back full circle to the international conversation, where back in the day, it was typical you should have about 20% in international. And it's like, why would I have 20% in international when it underperformed for 14 years? I did the math, 2011
but it's cheap,
to 2025. Though. Yeah. And it's just crazy. So a lot of our allocation before this year, we had maybe 6 to 8% international because it had underperformed, and we did not see the potential compared to other sectors of the market that really made out, like gold, precious metal, commodities, all that kind of stuff.
That's insane. I mean, think about S&P. We mentioned. Let's pull up that chart on S&P.
Do it. Bust it out.
Where's S&P? Okay, S&P is year to date, and this is as of 3/20 today, so September 4th, up 10.39%. The low point is probably what? April?
Yep.
March?
Yep.
Right
April.
in between, kind of smack dab in the middle. At that point, I mean, my gosh, you're up, like you said, 30 plus and change from that dip. But I remember the beginning, the first few months of the year, I mean, this chart shows great numbers. People were telling me they're super excited, can't wait to see what happens. And that excitement turned into fear pretty quickly.
Yeah.
Into the quarter. And then if you think about the old adage, sell in May and go away. Look at this chart. Sell in May and go away. I mean, you lost all those gains. You sold almost at the bottom, and you missed out on the upside of the market. What a shame.
Yeah, absolutely.
Absolutely. How about leaders and laggards? I mean, thinking of some of the areas that have made money, look at communications up almost 15% for the year. Industrials, you mentioned that earlier, up just shy of 15.4 and maybe 14.5. Information technology just shy of 12.
Utilities.
Boom. I mean,
yeah, but think about it. Like the cost of your utilities, have they gone up over the last couple of years, in your opinion?
I'd say so. I mean, it's
I feel
hard
like
to
they
track.
have.
I'm on auto pay. I kind of look at it, and some months are warm in the summer, and you got to have the AC on. How often am I home? Like, there's so many variables, it's hard for me to gauge.
Yeah.
I guess I'd have to get really granular, bust out the statement, and say, okay, what does it cost? What do they charge per kilowatt?
Sure.
Something like that. I don't know.
Well, I can tell you when it's, in the winter when it goes below 69, my wife turns on the heat, and when it goes over 71, the air conditioning comes on in the summer. So like sometimes I'm like, hey, how about we just open a window and put on turn on a fan or something, you know?
That reminds me when I was a kid, like at night, sleeping at night, you had the window open and the fan on, the screens are down, and like you just you hear the crickets. We don't have that very often because we have the AC on all the time too.
Yeah,
we're in the same boat.
Yeah, the modern amenities. I mean, it's different if you live in Florida, but here, I want the windows open and just a nice summer breeze as often as possible.
Sectors, I think of basic materials, it shows around 9%. Gold is up 30 and change for the year. Yeah. 30. Triple what the S&P has done. So
yeah,
when you think about what are some of the factors, well, there's a lot of countries buying into gold, right? The old gold standard. The other thing is, how about the U.S. dollar coming down? The U.S. dollar's been coming down for a while now.
Yeah. And what about crypto and how that is all playing in? And I do think the digital currency thing is a legitimate momentum-based force kind of coming into picture, like heavy. And it's, I think it's backed by the fact that the Trump administration is really pushing that as well.
Yeah, what was that? Early August 4th or 7th, whatever it is, he signed that legislation, that piece of legislation, that document that says in early 2026, 401k providers have to consider an allocation or find a home, I guess, a chassis for investment in crypto. So I think it's here to stay. I mean, I still don't completely understand or comprehend the dynamics behind it. I mean, I was always able to move money pretty easily, I guess maybe it's across the pond and when you're exchanging currency, and there's all these hands in the pot, if you will, charging a fee to make that transaction happen. It's eliminating a lot of that, maybe making it more streamlined.
The thing that still kills me is when people are like talk about mining. Like I picture, I don't even know. I picture like lemmings mining somewhere.
In essence, it's basically verifying the transactions, and they have to have so many computers online.
Yeah, it's crazy.
That. Seneca Lake. Seneca Lake, they had
the power plant.
What's the power plant there? I don't even know what it is, but but they converted a lot of their rooms or their space that they had to allocating computers to doing that, and it warmed up the temperature of the lake. Like 10 degrees, yes.
Oh, I didn't know that.
Yeah, they had an article. I think this is like a lawsuit maybe 2-3 years ago.
There's a Air Force base on Seneca.
Did not know that.
Yeah, not a base. It's like when we were there, we stayed there a couple days in the spring, and you'd see like helicopters doing exercises. There's like a little island in the middle of it. Yeah, pretty cool.
No kidding.
It was cool. Eating breakfast and like you see a Apache fly by and Chinook. Those are my favorite.
I don't even know what that is.
The Chinook is the one with the double propellers. It's the long helicopter with the propellers on each side. Come on, dude. Haven't you watched any military movie ever in your life?
No. Wait, what do you want me to watch? MASH?
Maybe.
Episodes?
Actually, it is in the beginning of MASH.
Is it?
I'll bet something on it.
Calling me out on MASH.
I'll bet a shoe.
What else? Macroeconomic conjuncture. You've got inflation. What do you think about inflation?
Well, the cost
transitory, right? It's here and gone.
Yeah, sure. Inflation's a slippery slope, and that's why he's been hesitant to increase interest rates. I know if you're a right-leaning, Republican-esque, you're mad at Jerome Powell. I think he's in a very uncomfortable situation. Doesn't help that he's getting bullied by the president of the United States. Kills me. But he has every right, in my opinion, to kind of be where he's been, because it's like if he cuts too soon, inflation potentially could stay a lot longer and even rise. If he waits too long, then we can end up in a deeper recession than we would have been.
Yeah, I don't think. I mean, I remember early on them saying it's transitory. This is nothing, and thinking there's no way that this is going to be fixed with anything the Fed does or anybody else hopes for. There's not an easy way out. But I do think that this started a long time ago. Like, I think when we were in a good place, I remember the markets were doing fantastic. Just before everything kind of unraveled, you had Janet Yellen. And I remember thinking, what are you waiting for? We're in a good position. We're in a good environment. You should be raising rates so that you have a mechanism to be able to do something. If
you talking When was Yellen? Was she first Trump? No, before Trump.
I think she was before. She was during Trump as well.
Okay.
But
yeah, during Trump's first run, things were hot. Everything was great. They should have been increasing interest rates then, and they didn't. And a lot of it, like his pressure. But like again, if you're the Fed chairman, I should say, like doesn't matter what the president says. I got to do what I believe is in the best interest of the economy of the United States of America, right?
agreed.
And roll with it.
Agreed. I just don't think that the cost of things will go down. You think of housing, you think of food.
No.
We talked about restaurants and chicken wings. Remember when the chicken wing expenses went through the roof and then costs came down? Did you see, your local retailer, your local restaurant saying, okay, instead of $3 for, 6 wings, it's now going to be $2, $1.50. It doesn't happen.
Yeah. Same with lumber.
You just get used to the prices and it becomes, quote unquote, the norm.
Yeah. Well, you can't increase money supply. In 2 years, we increased money supply 43% in 2020, 2021, and expect inflation to be transitory. Dude, you just like dump truck unloaded all this money into the economy. It's like, oh, yeah, it's fine, And I heard the other day, and it was, forgive me, it was probably a stupid TikTok, but they were talking about how they were like the socialists now, and they're becoming more and more popular with like the guy in New York City, the mayor who wants to run, Mandani. And he wants government-run grocery stores and all this stuff. And so this one guy's commenting, and he's saying, oh, well, Elon Musk has, X amount of billions of dollars. If he gave every person in the country $1 million, he'd still have like $83 billion left or something. But it's like, you don't understand. That won't solve anything. If anything, that'll just create hyperinflation. If everybody now has $1 million, that doesn't solve our problem. Everything will just become that much more expensive immediately.
Yeah.
It's like it's not as simple as you think it may be.
That's not.
Yeah. A lot of side tangents this morning.
So that's inflation, employment numbers,
Low.
Jobs report, low, right?
Yep.
But I don't see a lot of people struggling to find jobs. One thing I would say is regarding employment, I don't know that the pace at which people are getting an increase in their wages is keeping up with the rate of inflation. I don't think so. I think they're going negative. They're going backwards a little bit.
Yeah, well, they're saying that the average cost of the tariffs per household is like $2,500, if I'm not mistaken. I mean, this is a rough estimate. Mm-hmm. How do you actually calculate that? That seems pretty off, especially the way that the Trump administration has changed tariffs. It's like, hey, China, 20% tariffs. 2 days later. Hey, China, 40% tariffs. 5 days later. China, pause on tariffs for 90 days. How do you get any kind of calculation in there? And that kind of ties into the economic outlook. Where are things going? I could argue the case both ways.
Oh, yeah, for sure.
Bullish, bearish. Here's why. You know what I mean? Uncharted territory, to say the least.
Well, you think about the S&P top 500 companies, 90+% have reported. Those earnings have come in either in line or guiding upward. Mm-hmm. So there is positive momentum. I know the forecasts early on in the year were not very high as far as GDP.
No.
Numbers were extremely low. Mm-hmm. So I think we had somewhat of a pleasant surprise. The market has been going up. I don't think that the market is cheap by any means. It's from the perspective of a multiple, like earning a multiple, and PE multiple. But compared to what? Like, what are you going to do? Go to fixed income, go to bonds, and make 3-4% maybe?
Yeah, well, especially if they drop interest rates, which I believe they will. What's your bet on September rate cut?
Well, I think there's again, I don't know how they come up with these percentages, but there's like a 92% chance that they're going to lower by 25 basis points. So
I'd agree with that.
Yeah, I mean, that was supposed to happen so many times, and it didn't. It was paused. It was, but if you're looking at data, and I don't know the exact metrics they're using to say, okay, do we lower, do we raise, or do we do nothing, right? Wouldn't it insinuate that if you're lowering rates, you're trying to stimulate spending in the economy, that things are a little bit sluggish, things are a little bit slow? I don't know that spending is slowed down. I really don't know. And again, I don't have all the data in front of me, but I don't think that people are spending less money right now.
No. It's an interesting place where we're at, especially from a real estate standpoint too. Nothing's moving. I'm talking more New York. You look at like Florida real estate, and that's kind of cooled down a bit. So I think some of the more popular places have simmered, like almost like destination places, where places that are more residential have not. Like Rochester, when you look at Rochester real estate, it's still kind of gridlocked, right?
You mean as far as like activity,
Correct.
people selling their houses?
Yeah. Nobody wants to sell because they have 2.5% mortgages, and then their thought is, I can get a lot for my house, but then where am I going? What am I buying? You know. And next week I think it's next week we're gonna have a couple gentlemen from the mortgage world to kind of talk more detail about that, and we can
yes, we will
dive into that. So I'll be interested to hear their perspective on what they're seeing.
Well, it's also got to be a motivation too. Like, why are you selling your house, or why are you relocating for a job? Are you looking to get a bigger house, get more space? Is your family growing? And I think a lot of those little reasons why we would make a change become a bigger part of the conversation. Like thinking about when you're going to move and why. Like you say, if I sell my house, I'm going to make a ton of money. If I do that and I buy now, I'm going to be buying, from a 3% mortgage rate to probably 7.5, 8, somewhere around there. I don't know. We'll talk to the mortgage guys, but and now I have higher property taxes, higher value.
Yeah.
So even though I made money, did I really gain anything?
Yeah, it's a lose-lose.
What else we got? Bearish. We talked about price to earnings. It's expensive. You think of the presidential cycle too. I know the second year.
Slower, they say.
Slower, right?
We're still wrapping up the first year. This was his first year, yeah.
Believe it or not, yeah.
Wow.
Isn't that crazy?
That is crazy.
If you think about it, it has been a long ride, but it's only been. I mean, we just finished 8 months.
He's done a lot of stuff. Like him or hate him, he's done a lot of stuff in 8 months.
A lot is happening. You can't say he's been sitting on his hands.
No, and not for nothing. Like crickets at the border, southern border.
Oh, absolutely.
Crickets.
Absolutely.
I thought we can't figure this out. We don't know what we're doing. And again, love him or hate him, he said he was gonna shut that down, and he shut that down.
I think honestly, part of his campaign was run on the fact that there was going to be somewhat of a shakeup in a lot of different areas. You talk about you talk about tariffs. You talk about
all things he ran on. By the way, like. This is not a surprise.
Right.
Nobody should be a surprise. Yeah.
He ran on promising drama, and I think he delivered. Right?
Yeah. Only thing that disappoints me is the stupid Epstein thing.
You know what? And they just came out with more data on that too, and he kind of shut it down. And he's like, "This is like the biggest hoax around."
Yeah.
I don't know if I'm buying that.
I don't buy it. I don't buy it at all. Like, don't think that because you won, that like. We'll just blindly like follow you. Like, I guess that's me talking. Like, you have to present data that I actually believe, or information that I actually believe. And when part of your campaign, we're so on a tangent now, when you go on your campaign saying like, we're going to bust the Epstein wide open and the case, and we're going to get all these Democrats and liberals and all this stuff. And then it's like, now that you're in, you're like, yeah, Epstein thing was really fake, just fake news. Don't worry about it. Like, almost like, put it behind that curtain over there and let it go away. Like, are you kidding me? Like, this was a big part of your whole election campaign, And
what's the rationale behind it? From what I've read, is he's saying it's a distraction, but distracting away from all the good things that are happening, the things that he's doing. Of course, it's a little bit of chest pounding.
Yeah.
But like, I don't buy it. There's no like factual data saying this didn't happen because of X, Y, Z. There's so many different accounts, people coming forward, these women.
Yeah.
Like, something happened. The guy didn't just, quote unquote, commit suicide in jail for no reason.
Well, and then if there's nothing going on, then why is that Giselle lady in jail?
Yeah, nothing's going on. We just threw her in jail for the sake of it.
He's dead. He was in jail.
Is she still in jail, by the way?
She's in jail.
She's still in jail.
And they're trying to retry her now because, like, basically the president's like, oh, nothing happened. Then they're like, well, why is she in jail then? It's all fishy, and it's all, at the end of the day, I honestly don't think it's Democrat versus Republican. I think it's mass affluent and then the rest of us. Like, but I'm talking mass affluent. Like, people that, I'm worth $20 million. Like, that's a lot of money. I don't want to ridicule it, but like, compared to I'm talking the Elon Musks, the Jeff Bezos, like, that's at a different level.
Yeah, for sure, man. You can't even grasp the weight of that.
No, I don't even think I'd want to grasp. I mean, It's just a
better off not knowing.
It's a warped version of what life should be at that stage.
I agree. So here we are, 8 months in.
Yes. We just got off on such a tangent.
I mean, going back to the market, people got to be happy. I've had a few people that are pleased with making 10+% this year. I have some that are making more and some that are more conservative that have made less. But some that are on the upper end of things have said, I'm happy with that. I'd like to maybe take some of the earnings off the table and scale back. It's hard to say when that is. Just because the market is up doesn't mean that it's going the other way, and just the opposite. When the market's down 15, 20 doesn't mean it's the end of pain.
Correct. And I think that's the importance of having a proper financial plan in place, like sitting down with an advisor, whoever it is, and just having this is what I'm trying to accomplish. This is where we're at. This is where we need to go. What's the game plan? So during the volatility, you're not making emotional decisions based on, oh, I'm retiring in 3 years. Well, if you're retiring in 3 years, you should have an allocation that you're comfortable with and a risk tolerance you're comfortable with through the thick and thin in the meantime, and sticking to that game plan. A lot of people ask me, new clients, when they come in, they're like, Dave, you're going to call us when the market goes haywire, right? And I'm like, no, I'm not going to call you. Like, what do you mean? And it's like, because we've already developed a strategy well ahead of time, and we're actively managing that portfolio, so we're making tweaks along the way. So when the bad weather comes, yeah, you're going to get rained on a little bit, but it's not going to be in comparison if you can't tolerate that type of risk. So we're going to have that risk-adjusted return in your portfolio. So if you can't stomach a whole lot of volatility, you're not going to be in a situation that would force you to endure that, right?
Yeah, force you to make compromise or
Correct.
a tough decision.
Correct.
And that's the thing, it's more about play. It's not just pulling out the statements, setting them out on the counter and saying, okay, this is 2020, 2021, 2022. How much did I make?
Yeah.
Okay, that's great. If you make 50% this year, you're negative 20 the next year. What does that actually mean when you're looking at your goals, right? Yeah. That's the bigger thing is, how much am I going to pay in taxes? What am I left with? What does my income distribution look like when I retire? There's a lot more that goes into it than just the returns.
Yeah.
Yeah,
and I think something that we'll talk about in future podcasts here is with new legislation coming, big beautiful bill, not big bad bill.
Big bad bear coming.
Big beautiful bill. Dissecting it, how does that affect your average person? I know there's a lot of perks in there for wealthy Americans, but there's also a lot of perks in there for blue-collar Americans. Tax-free overtime. Yeah, I said that right. Tax-free overtime, tax-free tips, increased in Social Security deductions. More of your Social Security will be tax-free, and a whole bunch of other stuff that we need to dissect.
Some stuff in there about car payments or car loans, interest on that.
If it's American, I'm gonna butcher this. If it's an American-made car, but even if it's not American, say it's Toyota, but it was manufactured in America.
Enough of the manufacturing was done here, and who judges that? I don't know.
It's 80% American. Yeah,
there's a lot of meat on that bone where it's promises, and I guess it's maybe dissecting it, getting some accountant CPAs, some tax professionals and things to give us some more insight on how that actually works. Because all these promises, we don't actually know what it means.
No, when the rubber meets the road. And that's something that we'll take a look at future podcasts to kind of dissect, at least at a high level of what can we expect heading into 2026.
Absolutely. Well, I think that's all the time we have for today's show. Thanks again for listening to the Pennywise Financial Podcast. Signing off.
You've been listening to Pennywise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is Pennywise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.